All right. Good afternoon. How's audio? Audio good? Let's see. 1 second. So, welcome to how to or why we should have Forex. Why it's important to have Forex in your portfolio. All right. Let's see here. All right. So, if you're wondering um, this about Forex and we begin to question, do I really need it? What parts are important? Well, you're going to begin to here in a few minutes. We're going to go over the reasons. Okay. Let's see here. Just checking some things. There we go. All right. So, welcome to the session. Glad everybody could make it. Good, good. All right. Excellent. So, with that, let us dive in. There you go. All right. Sorry about that. Just had to grab something. All right. Um, so 5 reasons. These are actually it's 4 reasons. Sorry about that. Let me fix that for everybody. Uh, yeah, we're looking at it at 5 reasons, but it's actually four. Sorry about that. So the dollar, we definitely, if you live here in the United States, you are going to definitely have some issues making the wage that we make. And more importantly, what if the weight or the dollar starts losing value? What can we do to, I don't want to say hedge it, but it is a hedge. However, you can definitely have opportunity there as well as the Forex market, which is $1 trillion a day market, does provide um, opportunities on a weekly basis. And more importantly, if they are a longer term or a swing trading type of opportunity, always available. Now, some of us are just strictly investors, and this does need to be looked at because if you are managing your portfolio and maybe the markets aren't moving as much, there may be a reason. Okay. Or on the second reason, there's event risk, right? All right. So let's take a look at the dollar here. So here we are. Our wage depends on how well the dollar is managed. And we'll go to see certain areas that do um, affect it. Okay. And actually, every major country is affected by the USD. And we should not forget that a major country's currency affects their working and investing population. And I'm talking about Europe, London with the pound, Europe with the euro, uh, Australia with the Aussie, Canadian dollar with the USD CAD and uh, the Mexican peso USD MXN. If you've never w- taken a look at these on a longer term basis, I know a lot of us, we get so excited on day trading Forex that we lose the total focus on where we can make a big difference, and it's in the longer term, the portfolio. Okay, all right, let's see here. So that's a dollar. Event risk, elections. Every country has elections. Whether when that definitely does affect the currency. I mean, how many folks are already seeing the effects of any type of new government that comes in? Whether it doesn't matter if it's the U.S., it could be Canada, it could be Mexico, and these are right in our these are right on our border, and these do affect pretty much the dollar as well. If they're uneasy, then that makes um, our trading a little uneasy. Okay, maybe in a longer term, weather. Now we're starting to see a lot of weather affect certain states here in the U.S. and I mean Europe too. We did see um, some floods going on. I believe it was it Spain or Italy, but we're starting to see a lot more changes in the weather and how that affects, even though we're across the pond on the Atlantic or the Pacific, it does have a tremendous effect and provide some opportunity. Other unknown events may move currencies, um, and that is a factor. We don't want to have our hard earned where 401k that has been earning doing well for so long, and we're about to um, retire, that we don't want to see it depreciate, that earning depreciate, which is the dollar. And then the same, it goes the same for the Australia and Europe and the people in England and the Kiwi in New Zealand and also Japan has a tremendous effect on the event risk. And then something that could have affect is volcanoes as well, which we're seeing in Spain in those islands. Okay, go Red Sox. Gotcha. Yeah, that was some game. All right. So, and then more importantly, we have the FOMC. This is probably one of the biggest, is that it does determine whether your dollars are going to appreciate or depreciate. FOMC is in the US. However, countries have a form of their FOMC. Their decisions may affect currency with a negative or positive impact. All right. So if you are making US dollars and it is hawkish, hawkish means it's appreciating against say the pound. Okay, it's earning more than the pound, which or it's usually the pound more than the dollar. So uh, that does affect where we can use our dollar to buy more in the pound. Okay. Well, when you're in England, when you're traveling, when you're going to Europe, when you're going to Australia, Japan, okay, you always want to have some type of protection there, and that's what this offers. Is having You don't have to have a big chunk of it in your portfolio, but just a small portion. Okay, because it does affect everybody in the world. And at most, 4 to 10 trades a year would be normal. And what I've seen lately what I've seen lately is that it's been really one or two a year. So folks that look at the foreign exchange market and say that's very, very risky, well, it depends how you go about it. Okay, when do we place those opportunities? When is it beneficial or the optimal area to begin a trade, whether it's in any major currency, the yen, and we'll take a look at the charts here in a minute to see um, which one fits your um, your portfolio. Okay, this just doesn't mean traders here in the United States. It's all over the world. So if you're maybe your currency, if you're in India and you're trying to trade forex and you're a little scared of of losing, on foreign currency, you can look at more at maybe not making so many trades in a day. And that's what I'm about to show y'all is that there doesn't need to be a huge amount of trading each and every day or during the year. You can see that possibly there could be one trade per year. Any questions on this? And it's simple for the most part is if you were to begin looking into the Pinnacle method, it's a simple execution and it's easy to track. Okay, small investment to start. You do not have to manage it on a daily basis. Okay, we would definitely provide some key areas, key points when necessary. There isn't any type of it's a simple strategy to learn as well. So we're all about here at the Pinnacle Institute, we're all about keeping it simple, easy, and not getting too complex. Okay, and that's a problem for a lot of us is that when I stepped into trading forex, really didn't understand that we can look at it from a portfolio area. And there are some very successful forex traders that trade it daily, and there's some that trade it every other day. So why not look into it and put it into more of a swing trading type of opportunity? Okay, where you're not doing as many trades per day, per year, and you are focused on performance, but you're more focusing on the protection from what we were discussing earlier. Is that you got you're earning a dollar, or if you're in Australia and you're starting to lose, um, it's looking dovish, which means that your currency is losing value against another country's currency, which is usually the dollar. Um, you may want to put some type of protection there. Okay, it doesn't have to be the Aussie dollar. It could be um, some cross currencies as well. Okay, cross pairs, uh, and then you event risk. You definitely need to look into that as well. And we're going to take a look at those. FOMC, we all know about that. You definitely have to keep an eye on those areas, and then um, and it fits. At most 4 to 10 trades a year would be normal, and then even simpler than that. Okay. All right, so let's take a look. Let's dive into the charts. And what we're going to start with the dollar on a monthly. Okay, and this is where in 2011. Okay, so in 2011, we're starting to it's rallying up all the way up to about it's pretty healthy. Okay, so that's this would be definitely somewhere for me. Let's see, what was 2012? Yeah, I can't remember, but it's pretty stable. Nothing really to get worried about. Now, if we're in a different country, if we're living and earning different Aussie dollars, there may be some type of, if we're getting paid in Aussie dollars, um, we may need to do something where we can hedge this or have opportunity when the dollar is getting a little hawkish and appreciating over the Aussie. Okay. So all the way to 2013, we continue to dollar continues to perform well, um, keeping it around the 80 the 80 index range right in here, which is really good. And then 2014 looking even better. So not much to do around 2013, 2014, 2015. 2016 looks good. So when you see on this monthly chart, you see the dollar rallying. That's good if you're in the United States, getting paid by the dollar, and you're continuing to see, it's staying very high, and it looks good. And then you have a little drop here uh, at the end of 2016, but nothing really to get too alarmed. Okay. If anything, there was, if you did take action here around the summertime, right before the summer, there was another opportunity here as well. Okay. Now, don't think that it's just Forex that you can have in your portfolio. There are ETF um, opportunities as well. You could use the ETF that's exchange traded funds, like the let's see, what are the names, like the FX. I think it's FXE. That's the euro. And the only thing I would say, the reason why I'm not really trading those right now is because there's just not enough trading per day. So I just stay in the Forex, spot Forex for now. Okay, it's much safer. A lot of us like to see or like to dive into things like that, new products, but sometimes because they're not well known, um, people won't trade them. Okay, now on $1 trillion a day market, you are going to see some movement. All right. And even though you're not going to be trading it every day, spot forex for swing trading is a lot more safer than that. Okay. Oh, okay. Argentina, nice. Crypto, yeah, crypto. That's a little different. As um, we get excited, and when that first started coming out, and people making all, of course, if anybody is making money. How many people do you think really made money off of crypto out of the entire population of the world? Not many. There was some that did make money. And when I'm talking about make money, I'm not talking about um, make money one day then lose it the next day. I'm talking about folks that are actually made money and said bye bye to cryptocurrency because it began, for one, it gets a little expensive if you trade it in the futures market. The futures Bitcoin, you got to be careful there. To me, it's a little more standardized and safe. But as you get into these other um, stores that have it or institutions, it can really disappear. So it was and for the most part, and it's not just here in the United States with your friends and family. And I'm going off on a tangent. Well, not on tangent, but something very important is that folks love to make fast money. I mean, who doesn't like to make fast? I love making fast money too, but when it's something as not as you don't know the whole piece of Bitcoin. You just know that it's a it's it's data really, or it's code. So I don't know anything about code. I tell family and friends, if I was a coder, if I was a code writer, and I would make sure that I knew the inside and out on how to find if someone did escape with my Bitcoin. It just disappeared. So that's the danger with it. And I don't know too many people that killed it on Bitcoin. Okay. So just be careful with that. As I tell everybody, don't get too um, excited about it. Now, something to get excited about would be trading spot Forex. Okay. And I know from even my daughter, she just graduated a couple of years ago and speaks about this. And it gets a bad name because there was something going on in social media where you could trade Forex and make money. Well, it came down to it, it was more of a pyramid scheme. I don't know if y'all heard of that, but that is something where it gets a bad name because you're trying to get you tell your friends you're making money, everybody's making money. So one thing for sure, if you're getting a notification somewhere they're making a lot of money doing it, it's probably because they got in early, for one. And second, maybe they're brainwashed and they think they're still making money. But one thing is, pyramid schemes, for one, they're illegal. So if you get caught, you're going to there's going to be penalties. And plus, it'll get on your record. So you don't want none of that. So spot Forex, pretty much, you look at it that way. And then taking even more a step further, swing trading and just taking a trade once a year, that is really not a lot of risk, right? And I'm all about not risking a ton. So you can see here, 2018. So 2017 is probably where we definitely wanted to, going back to the charts, folks. So this is December 2016. So the end of 2016, we see the dollar just plummet. It just broke all the way down um, to this 90 area in the beginning of 2018. Okay, so 2018 is where. So 2017, here's where we needed to take action right here. 2018, by 2018, it already recovered and had a little rally. So just go on this journey with me, and I'll show you where a lot of this can help us. Okay, the main thing about getting the help that you need here is knowing when we're about to lose value on the dollar you earn. That's the most important part. The not so important is when the dollar's going up, because then yeah, we're all good there. But we want to find these areas where if you're about to retire, I would be, for one thing, really upset if my dollar started just dropping for the last year. How could I take advantage of this or protect myself against this? And a lot of us didn't know. I didn't even know that. I mean, we saw it in college a little bit, but they don't teach this. They tell you, oh, yeah, well, they tell you it's bad. You're like, yeah, you started, or, um, you know, maybe a lot of loans are being uh, put out right here, which is great, and everything, but you're still losing a little value here. So why not get a loan, get a low cost, low interest loan as well, or 0% for what, 84 months or something on a vehicle, and still, even though the value of your dollar is going down, take advantage of it somewhere else. Okay. So let me ask y'all this real quick. If you are currently, um, let's see, if the dollar is currently moving down, okay, on the dollar, what do you think is moving up? If the interest rate on the dollar begins to drop, or the interest rate for the United States begins to drop, what do you think is going to happen to the other currencies if they do not decrease their interest rate? And this is how simple it can be. It's just that in college they don't teach us this. The only place you're going to see this is in the Pinnacle Institute. This is the only area where you're going to learn how to protect ourselves when the dollar drops, or if you're in a different country, when your country's currency drops. Okay. We want everyone to take advantage, and it's available to us. Okay. So now, where we see ourselves today is that net from 2020, I guess this is last January. Was this March, January? Around there, we see the dollar drop to in 2020. Okay, so here, could we have done something here? Absolutely. Between March 2020 to December, uh, what's that? Oh, I'm sorry, January. I'm reading it wrong. January, um, 2021. Yeah, this is where now we're starting to see the dollar start rallying here. Okay, so we're good. All right. So if you live here in the United States, or maybe you're working in a different country, but you're U.S. citizen, getting paid with U.S. dollars, it's still holding and wants to move higher. That's good, right? Everybody's not work. So this is the big if. Okay, if we continue to go up, if this goes back into some of these higher prices, or into these monthly areas in the Pinnacle method, we call these supply zones. Okay, the lows are demand zones, and this is where all the buying is taking place for the dollar. Okay, bought again here. Okay, so where do we see, and not timing it on it, but it almost looks like you can time it though, get pretty darn close, is that now we don't see really some action until price gets all the way up back into 99.04. Now that's a big, big um, space there, right? Y'all agree with that? We have a lot of space here to move higher. Okay, so this is put on here supply, and this is what you will learn, the Pinnacle method, and this is demand. Okay, Now you don't. I don't. I'm not putting in any, um, special studies. Okay, you don't see anything special. What you're seeing is actual price. Right now, the dollar's trading. I know there's a monthly chart, but it's trading at 94.17. Okay. All right. Any questions on this chart? Now I'm going to just take these um, vertical lines out so you can see a better picture of what we do here in the Pinnacle Institute, especially when you're starting to learn Forex. Now, we got a Forex course starting on Sunday that me and Bill Nelson are going to teach together. So this is one of the areas that we do cover. Okay. Very, very important. So now, and it's almost like a silent, um, the you're and I'm not blaming it on anybody. It's just really, and it because ever since I was little, it's been going on ever since. Is that why don't they tell us to take action when price gets up here, in supply? Why don't they tell us, like, well, the value of your dollar is about to change, so you may want to do something, right? Why don't they tell us something? Or that, hey, right now you're looking good, don't do anything, right? They leave it all on our shoulders, which is fine. It's just, tell us where we can learn this, okay? And this is more for, uh, like we said, where can this go on your portfolio? And then if we get used to, if we start this at a younger age, um, and I'm not saying 13-year olds or high school students, but in college, if we could have our kids, or, nephews, nieces, learn how to know what they're seeing, is that instead of just going out and doing fantasy football, which is great, and enjoying traveling, going to different places, great, and understanding why maybe a country they go to, why they're getting more for their dollar, that would be so beneficial, right? This would be a class or a course, or the Pinnacle Institute would be, uh, to me, would be a definite must to learn on how to manage, or to just have a little piece in your portfolio that is simple. You don't see too many trades going on right here. Um, dollar goes down into this demand, right? You just do it once, and then that's it. You know, you're into a nice, you know, not only are you earning dollars, but you put it into a some type of dollar account that moves with the dollar index. You're doing well too. Okay. All right. Any questions? Any questions? So that's just the dollar. Okay. Now, how do these affect the other countries? And so we got the yen. We'll take a look at the yen on a monthly. Okay. Oops. Make it bigger. Bigger candles. We got the British pound as well, which, Brexit, that was a big event, right? We have the euro. Let's see here. The euro. We have the Aussie dollar. Now, just to say, these other countries, they have their own committee to make their interest rates. They have their own I believe for Australia, it's the Royal Bank of Australia, and they're the ones that make um, they'll make the vote on whether to um, increase interest rates or decrease interest rates. So you got Australia. There's Canada, the Canadian dollar as well, which the Canadian dollar, as you'll see, um, sometimes will reflect oil prices too, because that is their bread and butter for their economy. Is the If oil prices are, I don't want to say at $100, I don't know how good they would be doing. That's really out of the ordinary. But where oil prices are at now, you probably see something. Um, they're and and you could see the reason. So you can see the reasoning behind maybe the dollar starting to drop here, or the Canadian dollar is rallying right now because of the oil prices right here. Okay, and then the Mexican peso as well. Again, on the southern border. So we got the northern border, the southern border, and it's very important to me, knowing what I know now. I would want to know both what um, my northern neighbor and my southern neighbor, how they are reacting to um, some of these FOMC decisions. Okay, all right, and you can see for the most part on the peso, you can see really nothing to do for. I mean, if you bought it back in, say you were working for a corporation in Mexico, and you saw, you're like, man, if there's any way where I can, continue to appreciate, man, this thing is really from the get go back in '94, right? If you would have bought it just back in '95 and just held it and held it and held it, man, it is not even going close to falling. So right there, what does that tell you? You know, you really don't need to have any type of money manager help. I mean, maybe you know see a couple on a free free consulting. Sometimes they hire some free consulting, and it's not bad to dab in there to see what they're thinking. Okay, and with the knowledge from the Pinnacle Institute, you can pretty much have a chart like this, and then go to one of those, dab a little with that consultant, see what they're thinking, and see what they think about the peso or any of them. You could grab any of these. And I'm not saying go hire one. I'm just telling you that they're going to tell you maybe something different. Okay. If we go back to the dollar here, I don't know. They may be very, I guess, biased. Okay. They never want to have anyone short in the market, right? That's really big. So if you ever want to test one of them, okay, you can go to the peso here and see what they're thinking. Of course, they're going to say, yeah, it's looking good. You need to put that in your portfolio. Canadian dollar, see what they say about this dollar starting to drop. What are they going to say? You know, and then more importantly, we'll come back to that here in a minute. The Aussie dollar, right? Aussie dollar is it's not going up. They want to see this. They want to see it continue to go up. Okay, and here's where as well in the euro. See, the euro is starting to fall here. Okay, so what if you had the ability on a longer term, if this euro starts dropping and they're telling you it's okay, it's an investment, it's going to continue to go up, okay? It's going to go up. They don't want to tell you that, you know, in here, or right in here, and you'll learn this in the Pinnacle method. This is the way we show our members on how to take advantage on a longer term. And this is just a one trade type of execution here. We're not doing so many. Now you can have a strategy where you could maybe do a couple. You don't want to do too many because it's long term. You want to see the swing. So you got some supply here. Okay. Well, really, let's go. Let's go higher. Let's go here. Yeah, right here. So this supply here, your your analysts, or if they were realistic or being honest with you, they would have told you to short the euro up here. Okay. And this is not 100% of your portfolio. This is very small piece. Okay. And this was back in, let's see, when did it start? 2020. So I guess the beginning of 2021, if you were short the euro, okay, then right here, and all you're doing is just writing this down until we get into some demand, right? So here's the demand right here at 111. Okay. So here is where you would want to take action on the euro. Okay. And you see, it's not a lot of trades. So realistically, you could do this, was probably on supply, what we would execute probably on this one in December. And if you wanted to maybe have another strategy and do it again in May of this year. Okay, so there you got two entries here already, and it's really about one a year. Okay, one every 12 months. So, um, and that's really a good investment, don't you think? A good strategy. How many folks thinks this would be something they can do in their portfolio? And you don't have to look at this all the time. You don't have to look at this all the time because it is swing trading. It goes in your portfolio. So not only is this occurring, so basically what you're doing is that your dollar's earning on what you're making here in the United States. And then if you have a little portfolio here on the euro, you're putting in you're selling the euro here, then right then and there you are um, taking opportunity. Okay, opportunity, and it only took two trades. All right. Any questions? Is this simple? We try to keep it as simple as possible here. We don't. There is other. We have the exchange that we do day trading, but there's also swing trading opportunities, and this is something that not a lot of traders will look into for their portfolio. Let's take a look at the yen. Okay, now the yen is starting to move higher. See there? So 2016, if you decided to do something on the monthly, back in 2014, there was some demand right here. Okay. And finally, price came on 2016, hit this retest or hit this demand zone. And has held up nicely up until now. See that? Now we come along, we start rallying and then got close here in 2020, and then we're continuing to rally. Okay. And nothing to do until we get to this supply. So you got one trade here, and now you may in 2022 or whenever that it happens, you're going to have another opportunity here. All right. Now, if it were me, if I was just starting out trying to learn how to trade Forex or any product, what have you, I would, this would definitely be a great opening. For one thing, you don't have need a lot of investment because once you, if you do want to learn and you do come into the Pinnacle Institute, we don't start you off with a huge amount of risk. Crawling first and then you take it step by step. Okay, we don't just jump into the market, put in your entire earnings in there and let it flow. No, that is we're not into that at all. We're into, once you've learned the techniques, the strategies, you find the one that fits you the best. Okay, and they're higher probability strategies. They're not things that we're going to you know, tell anybody to throw their entire investment in there. Okay, so see the yen as well. It's getting up here to the 120 area. That would possibly be another trade there. And then we check out the British pound, which is some of these could be a little tricky. Okay. So here on the monthly, right? So really, we don't see tons of, tons of, you really don't have to do much. But the good thing is when we're analyzing any Forex major pair or any product, we still like to see where that area of action is going to come up. What type of action are we going to take? So here, um, sorry about that. I'm moving the chart a lot. I apologize. But here, we have the supply. Oops. Oh, there we go. And then, where's our demand? Okay. We're always in any chart, we're always looking higher prices for supply, lower prices for demand. And there's where we're going to take action. Maybe something like this right in here. You can see that it's been here, and every time it retests this demand, it does move away. Okay. So something like this. And this is the demand right here. Okay. Any questions of what I'm showing you or what I've shown you this afternoon? Okay. And then that'll be the next trade. Okay. Uh, yeah. Y'all doing good? Excellent. All right. So let's move on. Let's take a look at we did the euro. Yeah, there's a euro here. Let's take a look at the Australian dollar. So Australian dollar, not much to be done until, we come into demand. Okay. And you could see right off the bat, all this is just pretty much repetition. It's like, you go outside, you do yard work, or you're doing something in the garage, and what's the first thing you do before you're gonna do something else? Mainly when you're gonna have a snack after you've done some type of work. Wash your hands. It's just a routine, right? It's the same exact process. Well, prices, high prices, we are going to take action. When we're in low prices, we're going to take action there too. Okay. Here's demand again. So we're not going to do any type of action till then. See, that was 2020. And it looks like it doesn't take long for price to come back if you're looking at it at a swing trading point of view. Okay. I really want to reach out to a lot of traders out there, even investors, um, the investment piece, and see how they can take advantage of this. Okay, it doesn't take much, and there's no excuses when um, here's the Canadian dollar. There's no excuses because it's too risky. Well, we're not trading daily. Okay, we're not trading daily. We're trading only when price comes into our zones. See, all I'm doing is just pointing out a zone and a high location. Location is pretty much in high prices, and demand is primarily in the location is lower, right in here. Okay, good. So good work here. And you see prices, maybe, sometimes it doesn't get, oh, well, see what happened here. The supply was right here. No wonder. Monthly supply. So that's that. There's where we're at here. Oops. Right there. Now it's just moving lower. A lot of movement down here. So if if you are if you're trading the Canadian dollar or the Canadian futures, um, your Canadian futures would be going higher. Okay, which now your wage, if you're making the and this is kind of funny. They do call their currency the loonie. So if you're making loonies in Canada, you are appreciating against the USD, the American dollar right here. Okay, so things are good. And again, if you look at oil prices, you're seeing those oil prices starting to go up, and the Canadian dollar is appreciating as well. Yeah, that's telling us where that oil is heading to higher prices. Okay, just for now, can change on a any type of event. It comes to an event. It comes to all these banks. As far as finding out when the statements come out for each of the country's banks, we show you when they occur. And every morning, get together with Sam and Jasmine and go over um, a lot of these swing term opportunities on the spot forex as well. We have a Sunday um, spot forex session and a Wednesday afternoon session as well. So always involved in the forex. We in that's the reason, is because of all of these moving parts involved in our currencies, is that we want to make sure, um, just because the policymakers are up there, and um, I mean, I guess they do care about, us, the little people, but we need to know how to manage what our wages, what we're making. I would hate for go back to the dollar here. Hate for this to, thank goodness for the Forex markets. Let me get rid of these. This is really getting too, uh, too wrapped up here. Uh, let's get rid of all these. These are the ones mean just one trade per year. That's all. I was just making sure they're at you know, the bottom there. So you can see here, I would hate to see, if I was about to retire and did not know about this, and price starts, let's see, where's the low? And this is where we're ended. Yeah, so it started back in 72, and now, what we don't want is to just wake up and see that the low, the 7070, that was put in, yeah, that was the mortgage crisis, right? So if we're already educated on the dollar, and we see that, these supply zones that were created, let's see, like right here, this supply zone in '03 here, let's see, and yeah, I ended here, is we see that we have a supply zone, and could have taken action with this, with the economy being in the crisis, which is, it's not good, but to protect ourselves. So the supply zone created 2003, and then in 2000, see, what was this, April, and then in August 2003, when this movement on the dollar just started to decrease, the value started decreasing. You don't want to short our currency, right? But I'm sorry, but you have to protect yourself. So all the way down from, 5 years, into 2008 here. That's not until, the mortgage crisis, got the help right here, and the dollar started, gaining value again. Okay, and that's the protection there. All right. All right, y'all have a great rest of your Friday and a great weekend. Shard, thanks, buddy, for hanging out with us. We will see you, and yeah, we would love to see you here in the workshops. Y'all have a great rest of your day, and I will put up the. Let's see here. Oh, not that one. Not that one. Let's see here. There you go. That's what we got coming up. All right. Hope y'all enjoyed it. I will see y'all very soon. Have a good one.